All right, let's tackle a huge question today. Why exactly do financial crises seem to be a permanent feature of our world?
You know the drill, right? From the Great Depression all the way to the Great Recession, it feels like we're just stuck in this endless loop. There's a boom, then a bust, usually a bailout, and then we just wait for the next one. But is this just a string of bad luck, or is there a predictable pattern at play here? We're going to break it down into three parts: the spark, the fire, and the fuel. Okay, so it all kicks off with a tiny spark, a fundamental disconnect between how we see the world versus how it actually is. And that disconnect is the gap between price and value.
So what are we looking at here? It's basically perception versus reality. On the right, you've got intrinsic value. That's what an asset should be worth, based on cold, hard data. But on the left, you have the market price. That's what people are actually willing to pay for it, which is driven by emotion, by headlines, by perceived risk. When that market price gets way, way out of sync with the intrinsic value, when perception drifts too far from reality, well, that's our spark. That's the exact moment a bubble is born.
Now, a single spark is one thing, right? But what turns that little spark into a full-blown, raging inferno is how that initial shock spreads through the entire system. And this is what economists call contagion.
So, what is financial contagion? It's a pretty simple idea, really. A crisis in one place doesn't stay in one place. It leaps across borders, jumps across markets, and starts knocking over economies just like a row of dominoes. And believe me, this isn't some new thing.
We've seen this movie before, time and time again. The crash of '29 didn't just stay on Wall Street. It pulled the whole world down. The Asian financial crisis in '97, it ricocheted all through the region. And of course, in 2008, the collapse of the U.S. housing market triggered a crisis that was truly devastatingly global. So how does the fire actually jump from one domino to the next?
Well, there are basically four main ways this fire spreads. First, you've got direct financial links. Our banks are so interconnected that one bank's problem quickly becomes everyone's problem. Second, trade links are huge. If a major economy suddenly stops buying stuff, all of its trading partners feel the pain. Third, you get these so-called currency wars, where countries try to devalue their currency to get an edge, which just creates more instability. And finally, and this one is maybe the most powerful of all, you've got simple human psychology.
This quote from FDR, he said this in the absolute depths of the Great Depression, and it just hits the nail on the head for that fourth channel. When confidence just evaporates and fear completely takes over, investors panic. They pull their money out, they stop lending, and that lack of confidence becomes a self-fulfilling prophecy, turning what might have been a localized problem into a full-blown worldwide panic.
Okay, so we've got our spark. We've got the fire spreading. But what's the fuel? What makes the whole global system so flammable to begin with? To get that, we need to zoom way out and look at the very structure of the world economy.
Well, one way to wrap your head around this is a concept called world systems theory. And it's pretty straightforward. It says we should look at the global economy as one single, massive system. But it's a system that's divided into powerful core nations and less developed periphery nations.
Here's a great way to think about it. The core nations, they're like the mind of the whole operation. They control the finance, the design, the high-level planning. And the periphery nations, they're the body, providing all the raw materials and the cheap labor. Now, the crucial thing to understand here is that this relationship is fundamentally deeply unequal.
And this division, this is where things get really interesting. It leads to what the theory calls unequal exchanges. Basically, value, we're talking resources, labor, profits, is constantly being pulled from the periphery to the core. And the scale of this transfer is, it's just staggering.
Get this, in 2017 alone, the net value transferred from the global south to the global north was $2.2 trillion. And it's so important to understand. This isn't aid, this isn't investment, this is value flowing out through the basic everyday mechanics of how international trade works.
Just to put that number into perspective, think about this. One study calculated that with that much money, you could end extreme poverty across the entire globe, not once, but 15 times over. This constant extraction creates a system that's inherently off balance, inherently prone to instability. It is the fuel, always just sitting there waiting for a spark.
So you see the picture now, right? You take the spark of a market bubble, you add the fire of financial contagion, and you pour on the fuel of this deeply imbalanced global system. What do you get? You get this recurring pattern of crisis. Let's just look at two events, separated by nearly 80 years, that are just eerily similar.
Let's look at these two side by side. On the left, you've got the Bank of the United States, which failed back in 1930. Now, funny thing is, despite that really official-sounding name, it was a totally private bank, but its collapse sent absolute shockwaves through the system. On the right, Lehman Brothers, a massive global investment bank whose bankruptcy in 2008 became the single defining moment of the Great Recession. The parallels here are uncanny.
I mean, in both cases, you're talking about massive financial institutions that were deeply woven into the fabric of the economy. For both of them, last-minute rescue plans were debated at the highest levels. And for both of them, ultimately, the decision was made to let them fail, partly to send a message that no firm was too big to fail. And the result? In both instances, it dramatically accelerated a global panic, turning a bad crisis into an absolute catastrophe. It's really a striking example of history not just rhyming, but repeating itself.
So there it is. It's the whole story. The spark, that gap between price and real value. The fire, contagion spreading through every link you can imagine. And the fuel, that ever-present imbalance in the global system. It's a pattern that has defined modern economic history.
And that leaves us with a really big, kinda unsettling question. If these huge, devastating crises aren't just random accidents, if they are, in fact, a built-in feature of the system, not a bug, then what comes next?